Hi there, Michael Andersen here. Hope you're doing well, and happy Valentine's Day. Today is February 14th. Now, the last 10 days or so have certainly been a bit of a roller coaster for the financial markets. In fact, just today, the headline is inflation is back at a scaringly high level. What does this mean for you? What does this mean for Evo? Well, I have some commentary from our strategic partners, Potomac Advisors. These are the folks who run the Evo algorithm, and it was prepared on Monday, February 12th. Now remember, past performance is no guarantee of future result. You should always consider the pros and cons, the risks of anything before you make a financial investment or stop making a financial investment. Evo is not FDIC insured, it's not bank guaranteed, and it may lose value. I'll begin the commentary now. Quantitative or technical analysis has two main components: recognizing patterns and calculating the probability of these patterns repeating. When new patterns occur that lead to atypical market behavior, like last year's unprecedented low volatility and low drawdowns, and now a 10% market drop from an all-time high, a history-making pace is going on here. The patterns are not patterns yet. They have no history yet. So, our traditional systems may not function as well in this environment. In this case, Evo did not fully recognize this market behavior because it wasn't the result of familiar patterns. I say fully because so far our number one trading system gave three timely signals all last week while the market was nosediving. The first, a buy on the close of Monday, February 5th, and a sell on Wednesday, February 7th, then a second buy on Thursday, February 8th, which has given a sell for today. Remember, this commentary is as of Monday the 12th. The 3 days this signal avoided, February 2nd, 5th, and 8th, when compounded, resulted in a drawdown of 14.26% in the Ridex Nova Fund. Unfortunately, Evo was already on other buy signals throughout this decline. It is of some comfort to know that at least that aspect of Evo's signals proved, so far, to have been on target. I'm not trying to rationalize the failure of Evo to get us out, but as a post-mortem of sorts, I need to understand which systems, if any, are harming us more than they are helping us in the long run. There have been a bunch of overlapping and repeat buy signals since the buy on January 24th. One of these was a seasonal combination that our best long-term multifaceted trading system, which has remained on a buy for many months. These are systems we have used in real time for years with consistent good results in our backtests. But a seasonal system is not going to get you out of the way of an oncoming train wreck at the same time. I have no reason to look further at this combo unless the results over many time periods degrade the composite performance. On the other hand, combos that include two of our short-term bread-and-butter signals that buy the dip and then sell the rally have put us in harm's way twice in recent years, when there have been sudden steep corrections like now and in early 2016. Both times we had to rely on stops to get out. I hate stops. In our development of the stops, it was always better to just ride out the signal until we push the stop all the way to 7.5% from entry based on the S&P 500 index. Another problem with stops is it disrupts the normal flow of buy and sell signals and poses a dilemma on reentry. Because there have only been 3 stops in 30 years of backtesting and in real time, the sample size for what to do is minute. As a result, we had to make a judgment call to ignore the current Evo buy signals and only re-enter when we have an entirely new signal. This is the only time when a new buy occurred on the same day as the stop. It'll give a sell for today's execution, but with other systems still on a buy, and given today's market action, we will continue to hold Nova in the discretionary Evo 2 program. With the market rally today, it is likely sell signals for tomorrow will be generated by the systems that buy the dips and sell the rallies. In addition, an intermediate trading system buy that is based on professional traders' actions, surprisingly, gave a buy Friday for today. It is one of the key systems we use in our long-term system, which has been on a buy since July 2009. We have been testing a new multi-system combination with this system, and the preliminary results are very good in backtests, improving the return while reducing the risk metrics of the composite. I'm not ready to include this signal until it is entirely vetted, but it is also making my decision to hold in Evo 2 easier. Remember, folks, Evo 2 is the discretionary system where the algorithm provides guidance, but there is human discretion involved. None of you currently have Evo 2. The market may have made an internal bottom intraday on Friday and renewed its traditional behavior after a sharp correction, and a sharp selling climax, albeit not a classic one. In this scenario, we may expect a few more days of rally, recovering 1/3 to 1/2 of the drawdown, and then a renewed test of last week's lows, which dropped just below the 200-day moving average in the early afternoon on Friday and immediately exploded up. This would create an external bottom and a better liftoff point for a more meaningful advance. That is commentary from Rich Paul, the President and Chief Investment Officer of Potomac Advisors and the founder and creator of the Evo algorithm. I, Michael Andersen, am incredibly optimistic about Evo and what it can bring going forward. I think there are so many people now who are wondering, what should I do? What's the market going to do? Is it going to go up? Is it going to go down? And the concept of an algorithm making that decision instead of humans making that decision based on emotion is, I think, a very important part of a modern, well-diversified portfolio. Now, you shouldn't have, of course, all your eggs in one basket, but with Evo, there are some built-in measures of protection, such as the 7.5% stop, which was employed a few days ago, to help us limit any losses. As I mentioned, I am extremely optimistic for Evo going forward and incredibly grateful for the opportunity to partner with Potomac Advisors and share this incredible investment with you. If you have any questions about Evo or your overall portfolio, please feel free to give us a call here at the office, 410-690-4894, or just shoot us an email in reply to this one. As always, we appreciate your business and are truly humbled by the confidence and trust that you placed in us. It means an awful lot, and I mean that from the bottom of my heart. Thank you very much, and again, happy Valentine's Day.